Well, good afternoon, everyone. It's 3 o'clock here in the UK on Thursday, the 25th of May. Nothing much has happened since I've last spoke a week ago. Markets have gone up a little bit, given it all back in the last couple of days. So the S&P sitting at 4141, where it's been, apart from a handful of points, for the last, 2 months now. So we've got this debt ceiling thing still in the air. The head of Moody's came out, I think, this morning, say that he felt there won't be a default and they haven't priced that in. But their definition of a default is interesting. Government employees and government departments not getting paid would not constitute a default. A default, in fact, would only be if the capital amounts weren't paid, and the next date to service the capital amounts is June the 15th. So expect ructions between now and June the 15th until this is put to bed one more time. So let's have a look at the trends on VectorVest. Well, the confirmed down has been down since, I think, February, and we're in a down situation. Every darn thing is down. The UK turned up, but I warned everybody on Monday afternoon that experience has shown that when the UK turns up and the American market doesn't, that we have to be extra careful. And that's in fact what happened in the UK yesterday. We got slammed as the American market came back. The FTSE 100 down 1.5% odd. So if we have a look at the VectorVest composite in the US, if I can find the darn thing, there we are. And there's this tight range. It was already in a range for the last year, okay? But then it went into this tight little range over since the start of April. And that's 2 months now. So we've been in this, really within a handful of points of each other. It sat in there. The figure on the S&P 500 is about 4,110, and I've been speaking about that figure to the VectorVest regulars on a Monday afternoon now for 2 months. They must be sick listening to me. As you can see, the buy-sell ratio is right on its knees at 0.31, getting down there into a mega oversold situation, which is at 0.25, but as we all know, these indicators can sit mega oversold and mega overbought for one hell of a long time. So that's the confirmed down, and the confirmed down, as I say, has been in place since where? The 21st of February, and that kept us out of all the SWB woes, plus all the provincial bank woes, and now the debt crisis woes. I think that there's going to be some rough times, even if the debt crisis is in fact sorted out relatively soon. But there's been an awful lot of creative accounting done over the last month or two to pay everybody. And my back of a cigarette pack calculations tell me that about $600 billion worth of treasuries will have to be written in the second half of the year to replenish the Treasury General account, and that could cause liquidity problems within the stock market. So volatile times ahead, folks, where I think that if you are swing trading and you've got a good profit, then you should certainly think about locking in that profit, maybe taking a little bit, certainly getting your stop losses to entry. And that's stuff that we teach in the swing trading course at VectorVest, and we're just about to have another one, I believe. So that's well timed. I've still got a position in the QQQs. I couldn't believe what happened this morning, because that's the position, the QQQs. I've been away for a couple of days because at VectorVest UK we've had a 2-day trade show out in West London, and I've been there for the last couple of days. It's been very hard work, and I had this line in place, and my son is watching it, and I told him that if we actually went down below that trend line, that he should call the position. But in fact today it's gapped up significantly, so right back up on the highs in the QQQs here. if I draw in a Fibonacci level, that actually doesn't roll off my tongue easily. And we can see that we're through the 1.618 and it's come back and tested it. And that's a very good sign for further movements here. So I'm going to do my best to keep my wee hands off that for another day or two. I'll have a look at that before the close on Friday night. I wish gold was as good because I have a short in gold. It's going great guns. That's the short and gold. Didn't get in from the best levels, I think I told last week. Should have been short from up there, but I was sleeping. Shorted there at 2,000, and we're now down at 1949. So that's $50 move in gold. My GDX position came back, and I got stopped out of that at entry. If you remember, I was hoping to hold on to that position because I've still got a great deal of faith in the gold market. I view this pullback, and I've been speaking about this for a while, as a 3 to 5 week pullback before the big trend starts to go again in gold. But I couldn't afford to let that GDX long position turn into a loser, so I got out of that at entry. And this one's going quite well. I haven't taken any money yet. Those of you that know my work, if you actually expand this to an hourly chart, you'll see a great example of a Wyckoff upthrust yesterday afternoon, just as the US market opened. I think this move down is starting to look a little bit long in the tooth. As you can see, there's actually 5 waves in it. So we're at the end of this 5th wave. That I think will be a wave A down. So again, I'll have a look at that before the close on Friday night. As far as I'm concerned, folks, in terms of other positions in the American market, I haven't done anything at all. The color guard is somewhat bearish. VectorVest doesn't advocate buying stocks at this time. It says exactly the same in the UK. I have quite a few positions in the UK that need to be tenderly managed, and I shall certainly talk about that at our VectorVest UK meeting next Tuesday after the long weekend. My advice is to do your best to try and sit on your hands until we have this debt crisis resolved. I know that is conservative advice, and maybe I'm getting long in the tooth and more conservative by the day. But I think that we're going to be into a very, very volatile environment until this is sorted out. And I think that if you're got experience as a short-term trader looking at intraday charts, then I think you can probably make some money. I think it's going to be very, very difficult to lock in those profits in the volatility. So just be very careful out there. It's a long weekend on both sides of the Atlantic, both here and both in the UK and in the US. So have a great long weekend, and I'll speak to you next week. Bye-bye.